Hey guys, welcome to this week's edition of Trade Recap from my weekly newsletter. If you're seeing this on YouTube, be sure and subscribe. It's a free newsletter, lots of cool tips and tricks. Let's jump right in. We've got the S&P up on the screen here. This is what the trade is, and we'll look at SPX. And as you can tell here, we've been talking about the SPX since the beginning of the year. This is the beginning of the year. This dotted line right there is the start of the year. Now you can see we kind of started flatlining into the end of the year and then started rolling over, and we got in this channel here, lower lows, lower highs, lower lows, lower highs. And you can tell when we broke here, this is actually started accelerating to the downside. Now, if you caught the last trade that I did an SPX butterfly. I did a whole little series on hedging on the YouTube channel. If you haven't seen that, go check that out. It's pretty cool. Lots of good information there. But you see right there where that's the 50-day right there, and that's the 20-day, and this is the 200-day moving average. But you see where they crossed over to the downside? We started a butterfly, if you notice down here on the bottom. It was on March the 2nd, right there. We started a butterfly and we targeted 65.50 right there, and that one we put on and we bought it for 5.55, and we sold it for about $75. Awesome trade, awesome trade. The reason I mention that, we're following back up. We put another trade on when this thing started accelerating to the downside here and broke the 200. We started one on March the 20th, an additional second trade. You see down here on the bottom, 320 right there. Because what happens typically, you see the 200 right there, when you're on the underside of it, when you come back up, it acts as resistance, hard to get back through. Same way here, when you come down into these moving averages, that you tend to bounce higher. Here you tend to fail, and that's what I was assuming. Did some simple math. Now this trade expires tomorrow. I'm still in the trade, but I wanted to show you this because this is a really cool trade and something to know. So we were targeting, or are targeting, 6,300 again. This is SPX, and we did another butterfly, very, very, very similar. Just did some simple math. Let me show you the trade. So it's a broken wing butterfly. It's very, very, very similar to the last one. Last one we targeted 65.50. We simply moved it down. I did some math, did some approximation, looked at some charts, looked at some fib levels, tried to figure out where to place this and when to place it. Now this expires tomorrow. We put this on for $2.50. It's at $25, so it's already 10x already. But the reason I wanted to do this, and again, I'm still in the trade, is that you see on the upper end up here, we literally had, and I post this as one contract. You could size this thing up as large as you wanted to, but one contract, it costs $2.50 debit, and right now it's worth $2,700. Now it is a broken wing, that's a whole different thing. But here, here's the deal. So tomorrow this thing expires, and it's worth about maybe 10 grand, 9 grand, $10,000. It's up about $2,700 right now. Do we take this or not? And I've actually got a session here in just a few minutes. We're going to talk about this very thing. But I always tell people, if you are comfortable with this and you want to take the risk off, high five, take it off. It is much harder to get the max profit here. We completely nailed it on the last butterfly. Not sure that this one will do it again, but we've got 1 day left, and I'm pretty sure the market's very weak, and I'm pretty sure that it's going to come down, so I'm going to hold it. Let me show you this. Let's go back here to a 5-day chart right here. So you see down here on Friday, I'm recording this on Monday, on March 30th. It expires tomorrow, March 31st. We got to 6,356. 6,356, about, well, kind of where we are now on Friday. So again, the market, as you can see, here's the market. It's just no rallies are holding. It's just down, 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 down. I suspect it will keep coming down. So for now, I'm going to hold this. The butterfly's working great. Again, by the time that you see this, the trade will have probably already expired, but I wanted to show one that was actually kind of still in motion right now, because you do have choices. You could take this, and that is a very, very good win. If we get into tomorrow, this T+1 line comes up higher, and if we do indeed go down, you know, we can make even more money. Let's look real quick over here on SPX, and you can see for tomorrow, 31 March, the expected move is about 78 points. So again, if we go back up here, so 78 points, you know, is going to get us, well, kind of where this gray line is, basically. So you can see the T+1 line, the pink line is still, even outside here, we would still have a profit. So again, we'll evaluate this by the end of the day today, and if we do indeed keep coming down, you know, maybe we'll take it. I would like to get, you see the max profit there over here? If I hover over the center of the butterfly, say $9,700, I'd like to get 30 to 50% of that if possible, and we're getting pretty close there, about 3,000-ish or so. So we'll evaluate by the end of the day. We may hold it over, and I might do another video and follow up on this. But again, I wanted to go over this while it was still in motion so that you can see, and this is a good thing, you know, that you can have different ways to trade this, whether you want to take the win now or not. And I will say this, if this was, let's say 10 contracts, right? And now we're up 28,000. Yes, I would take off, say, at least a third of those, maybe half, and leave the runners on. And if it goes down, that's great. And if not, you know, and let's just see real quick, and then we'll wind it up. If we did, excuse me, if we did, I'll just do, we'll do 4. And right now it's going for about $30, right? You see the locks unclicked? That's what the current price is. So if we took 5 off, then we would book half that profit. So on the upside here, if we gap up, you see over here, if we gap up, we still make $12,000, almost $13,000. And if we go down, we have potential of making 61,000 max. So great trade. Anybody that, again, if you got this trade with me when we started this trade in our trading room, you know, high five, and we'll evaluate by the end of the day, see what we do. But I wanted to show you guys this, another great hedge. Now I will say this, I'm not as gung-ho of adding much more hedging on. We've basically shorted this thing kind of all the way down about 5 times, and there's a pretty good chance we're getting to a point where we're about 10% down. We could have a bounce here, and if we get a meaningful bounce, then we might reload. But for now, I'm being a little more careful. So anyway, hope that helps. Hope it makes sense. Let me know if you have any questions on this, and I'm glad to help. So thanks for your time, guys. I appreciate it. Talk to you soon. Take care.